Welcome to the Mining and Resources Jobs and Opportunities in South Australia webinar for Q3 2017-2018. I'm Jodie Badcock and I'm the Workforce Development Manager at RESA. I'll just start with the standard disclaimer. I believe that the people we've got attending today have participated in one of these webinars before, but I'll just remind you that this is of a general and not personal nature, the information we're presenting today. The webinar overview, the things that we'll be presenting to you today will be a very brief overview of RESA and who we are and what we do, a little bit of information about the Hiring Intentions Report. We'll look at the advertisements throughout Q3 for jobs in South Australia and what the big picture is currently looking like. We'll have a small degree of regional analysis. We'll look at occupational levels, the subsector breakdown and industry activity that might be contributing to the job growth that we're currently seeing. RESA is a not-for-profit industry-governed organisation. Our primary focus is in the mining, oil and gas, renewable energy and engineering and the met supply chain industry areas. I am the Workforce Development Manager and Phil DeCourcy, you can see there, is the Chief Executive Officer of RESA. We're both available to answer any questions, comments or follow-up that you might need as a result of this webinar. RESA's role is to support and facilitate jobs and opportunities for South Australians in the resources sector, and the way we do that is through labour market research and analysis and developing and delivering programs to address skills priorities for the resources sector as they arise. So when we look at the industry as an overview in South Australia, the ABS reports that mining in November 2017, which is the most current data that we've had access to, is 9,500 people in mining jobs. Research indicates about 15,000 South Australians are also employed in mining equipment technology and services sector, that's met sector jobs, which gives us a combined total of 25,000 people in South Australia working in the mining and resources sector. The sector's a significant contributor in advancing technology and the use and development of STEM industry skills, and it creates demand for professional and vocational talent, and certainly sees in this day and age a bigger and growing demand for an adaptive capacity within the workforce. So what is the Hiring Intentions Report? It's a brief analysis of the last quarter's advertised vacancy to get an understanding of the current skills demand, the skills required in industry, activity within industry and opportunities and pathways for people looking to work in the sector. We gather the data through looking daily at advertised occupations. When we look at the data, we look at vacancy by vacancy to look at what are real jobs for South Australians. So the positions are either located in South Australia or FIFO from South Australia, and the positions are in the resources and energy sectors. The vacancies we receive in raw data form are then classified by subsector, job level, location and occupation. The occupation classification generally follows the ANZIC classifications, and those classifications are self-nominated by employers. So we may see a job that is an electrotechnology job that's advertised as a mining occupation because it's at a mine site. So we need to take the data as we've got and work with it from there. So what's happening over the last 4 years? We can see from financial year 2013-14 we're the beginning of the impact of changes in the financial sector for the mining sector in South Australia started to have an impact through to 15 and 16 where the impact was at its peak. We've seen continuous growth from Q4 2015-16, and the most recent quarter is certainly indicative of that growth continuing. So in this last quarter, we saw 783 jobs advertised compared to 407 vacancies listed in the same period last year, which is an increase in that 12-month period of 162%, which is still higher than 2012-2013 when we started to see the impact of the downturn. So growth is not only continuing, but it's actually increasing. When we look at index vacancies, we index against an aggregated total taking into account the years 2013 to 2015. This gives us a 3-year average, and we're seeing constant growth against that index. And we've noticed today that there are peaks around the December period, which we believe may be attributed to maintenance activity occurring in regional mine sites. When we look at where the jobs are located, you'll see in the first graph there the job advertisements in Q3 by region. The majority of the occupations are advertised in Adelaide region or in the Coober Pedy and Outback region. This is consistent with what we've seen as long as we've been monitoring the regions of the vacancies. In the second graph there, when we do a comparison of Adelaide and Coober Pedy vacancies, we can see that engineering and business services opportunities are concentrated in the metropolitan area. We do note that in this period, mechanical jobs spiked in the Adelaide region, and when we looked at the data more closely, we could see that this was related to trade occupations being advertised through agencies such as Mader Contracting, Hayes Resources and Mining, Murray Engineering, where the work is actually undertaken in areas of South Australia that were not specified, but the vacancies are listed as Adelaide vacancies. When we look at the occupational level breakdown, so we think it's important to understand where the pathway opportunities might be. We can see that there's fairly constant levels of advertisements across the different levels. In trade occupations, we saw a bit of a spike in January, and that was largely due to one particular organisation recruiting a whole lot of diesel mechanics at that time. But overall, there hasn't been a huge amount of fluctuation through this quarter in the level of the jobs advertised. Sorry, it was laggers that were advertised in January. So overall, we can see 53% trades and operators, which is a slight increase from last quarter. Sorry, I think my notes have gotten ahead of me. Okay, when we look at the subsector breakdown for Q3 financial year 17-18, we get some insight into the highest demand occupations within the subsectors of trades, drilling and blasting and engineering. So these particular occupations have been selected because they are the most prolific, and also to get an understanding within quite large groups what the particular occupations might be. So for the 52 engineering advertised position, which represents 13% of the total vacancies, mining and project engineers are most in demand, followed by asset and integrity engineers, which is a shift from electrical engineers of about 5% in the previous quarter. In the mechanical metal breakdown, there's a total of 185 advertisements for these occupations, and that's steady at 31% of the total vacancies. The greatest demand has clearly been for diesel mechanics and fitters, followed by auto electrical tradespeople, which is actually a shift from fabrication boilermakers and welders in the previous quarter. When we look at the trade breakdown, it's based on the job level classification and combined subsectors. So we're looking at trades in the highest demand being diesel mechanics, drill fitters, making up 39% of those trade vacancies, followed by auto electricians. So auto electricians actually in the second quarter were a lot higher than in this quarter, but there's still a very big demand in those vacancies, especially when we look at a total number of 361 vacancies in trades. So in drilling and blasting, 30 vacancies for drillers and blasters in this quarter. 70% of those were for drillers, and again, that's largely in the production drilling rather than exploration drilling. So as vacancies continue to be at the current levels, it's important to monitor them to preempt the rising demand and potential skills shortages. It's also important to individual companies to understand for workforce planning purposes and understand what may be difficult to fill occupations within their businesses. So when we look at industry activity, we are still seeing that the subcontractors supplying to BHP, Q River Mining, GFG Alliances, Oz Minerals are generating quite a lot of the vacancies in this quarter. Although the mining companies themselves make up a small proportion of the total number of companies advertising, the jobs are actually largely located within their operations. When we look about what's happening now within the mining activity area, at this stage there's 20 JORC resources defined, 6 feasibility studies in progress, 12 preppers approved in the past 12 months, in the past quarter, and we're still working with the same 12 operating mines. So it does mean that there is a lot of activity going on, and when we're seeing preppers approved, then they are operations that are going to be moving into production within a relatively short period. So one of the things that we've started to pay some more attention to with the hiring intentions that we are reviewing is looking at where diversity, innovation and occupations in demand are fitting and what we're seeing through the jobs being advertised in this space. So I'll just start briefly in relation to diversity. In this quarter we saw 5 Aboriginal owned and operated companies advertising for new people, not necessarily targeted occupations to a particular Aboriginal applicants, but open to Aboriginal applicants. What we know about this is that it's good to see these companies growing and being successful in this space, because it is creating new opportunities for Aboriginal people and leading the way for a more mature workforce in that space. We've also seen constructive recruitment advertising for process technicians through the Females in Mining and Males in Mining program, which is program particularly targeted at gender diversity. So although this was just one advertisement in the quarter, it's good to see that companies are proactively taking on opportunities to promote diversity in the sector. When we look at the ads in general, particularly for the employers placing a large number of advertisements, there is encouragement for Aboriginal and Torres Strait Islander people to apply and encouragement for women to apply, clearly listed in the vacancies, but they're not necessarily targeted positions. When we're looking at innovation and the impact on the job market, it's not very clear the exact impact, because often the impact of innovation is not necessarily in what the job is, but in how the job's undertaken and some of the tools and techniques that are used in order to get the job done. What we have seen is starting to creep in more opportunities for analysts, data specialists and the A&I engineers, which are looking at process improvements and streamlining, and that often leads to the implementation of innovation and analysing where those opportunities might exist. When we're looking at I would like to refer people, if they're looking for more information on the innovation and the impact of innovations, PwC have released their draft industry skills forecast and proposed schedule of work for the resources sector. So I'd encourage people to have a look at that because they've done some quite detailed consultation nationally to get an idea of where innovation might be leading our sector. So in terms of difficult to fill occupations, well, ones that we've particularly noted are in the areas of drillers and different types of drillers. So it could be diamond drillers, fracking operators, coil tubing operators. So it's across oil and gas and the minerals sector. Drill and blast operators, certainly drill fitters in very high demand, belt splicers, laggers, cable bolt operators, concrete pump operators, and the engineers in the areas that we've mentioned before, asset integrity, project engineers, electrical instrumentation engineers and mining engineers. These are occupations in high demand and some in very specialist areas. So I think it'll be important for us to watch those and look at what the impact of this increasing demand might be. and start to think about what solutions might be in that space as the demand increases or stays at the steady rate that it is now, and employers demonstrating that they are quite difficult to fill. One other note I'd like to make that I didn't mention earlier in the space of the diesel fitters and the demand for diesel fitters and drill fitters, we have seen quite a number of job opportunities being advertised interstate, so actually requiring people to relocate. So across the quarter there would have been more than 25 jobs advertised in Adelaide where the companies would actually require people to relocate, which is taking a lot of talent out of our state. And when we look at the wage being offered for some of those positions, we're looking at a range of $35 an hour, which is following the decline in the industry when wages did drop, to now wages for the same jobs at $65 an hour. So over a year, it's $100,000 salary difference, which is obviously going to be attractive to South Australians who may look to move into Mount Isa or the Pilbara region to chase those opportunities and have the opportunity to access those higher salaries. Which is then going to have a flow-on effect on companies looking to recruit in South Australia. So that's it for the data that we've got available from the quarter that we've just completed in March. I'd just like to briefly mention the RESA runs a range of capability development programs, and we're currently in the process of a Whyalla-based program called Resources Ready, working with MET sector companies to help them build their capacity to access opportunities in the resources sector. This program will be rolling out at other national locations, so we're looking to be kicking off in Darwin, Karratha and Townsville. If anyone has any inquiries or any referrals that they'd like to make to the program, please give us an email and we can provide you with additional information through resourcesready@resa.org.au. Thank you. I'll just take a moment to see if there's any questions. So we have a question here with regard to the growth in trades roles to look at, is there enough trainings and apprenticeships available to fill the demand? And the answer that we're seeing at this point in time is no. Probably really need to go back and have a look at that in more detail to look at what the data is in terms of people enrolling in those qualifications and completions. We certainly know that the capacity of the training sector is nowhere near at the level of the job demands. I believe there's one RTO in South Australia that does the heavy diesel training, and they have a capacity limit. So we really need to, I think, be starting to talk to companies about how they can work with other organisations to address that. And the federal government, the state government, the new state government is currently in the process of consulting around boosting trade opportunities in South Australia and looking at what kind of programs can be put in place to get people into those trade apprenticeships. So we've just received some email today. I'm happy to provide anyone who's interested with some further information on that. If you'd like to send me an email or give us a phone call so I can get your details and I can send you through the consultation papers on that. We can also provide the PWC link in a follow-up email to this presentation for the industry analysis that they've done in regards to innovation and new skills. Thank you. We have no further questions. Thanks for joining us today. Feel free to contact us if you'd like any follow-up information, and we will speak with you soon.